guys, good morning. This is Hector again. Today is 3rd of May 2007. By the way, today is my dad's birthday, so happy birthday, Dad. Alright, let's get into business now. I'm looking into the EURCHF chart for the 4 hours time frame. That's the euro against the Swiss franc. As we can see in this zoom out 4 hours chart, we have a clear uptrend. Let's zoom in a little bit. We can see that we have the 100, the 50 and the 30 moving average pointing up, all of them in order. 30 above the 50, 50 above the 100, and all of them more or less moving in a parallel way. We also see that the 100 has never been breached. Okay, it's been touched but not breached, and now we are making a new high. So this is my pre-trade requirements. My pre-trade requirements are met, so I am good to go to at least search for an entry. Okay, for a setup. Well, we see in the last 2 weeks we've been in the 4 hours chart we've been seeing a triangle breakout pattern. Okay, this being the triangle forming a double top. There you are, double top. Finally a breakout of the triangle to the upside in the direction of the overall market sentiment. As usual, this is a very common setup. Triangle breakouts in the direction of the overall market sentiment is one of my favorite setups, because it's like an 80% chances of scoring a winning trade. It's a very common setup, setup that I trade very often, and this is what we've just seen throughout the last few weeks. Okay, now we are seeing now the pullback aspect of the breakout. Okay, thrust up, pull back to the former resistance level. Okay, there we are. And what I'm looking forward now is the beginning of a new swing up to the upside. Okay, the retracement has just gone back down to the area I like buying off, which is the area between the 30 and the 50. Okay, you see this is the 30 and this is the 50. Well, we've just retraced to this area, so that's another requirement that's been met, a requirement of the system that I explained in my website. So we are good to go to at least consider searching for a long entry. Alright, what do we have here? We have a clear bullish flag, this being the pole of the flag, this being the flag in itself. Flag in itself is basically a retracement channel. Okay, or also for all of you who believe in Fibonacci magic, we are right in between the right around the 50, between the 50 and the 61. So that's alright, we haven't gone beyond the 61 Fibonacci level. I am very apprehensive to take trades that have retraced beyond the 61% Fibonacci. And also I'm very apprehensive to take trades that have not reached in their retracement even the 38. You know, once we have, I don't like the 23 and the 76 Fibonacci retracement. When we see a retracement that's just not even touched the first line that I consider being the 38, I'm a little bit apprehensive, in the same way that if it pierces below the 61, kind of signals, rings off a warning bell, in my opinion. Anyway, so we have this bullish flag, okay, of a level of heavy support where we've seen loads of elements of confluence, the uptrend, the moving averages, the former support level, the Fibonacci level, etc. Loads of factors on our side to search for a long entry. So what's the trade plan? Okay, we have the bullish flag, and this is the level we want to hold the critical support level, piercing also below the 50, breaking below the uptrend, breaking below the support level of support resistance, breaking below the 61. If we see a dive below to this area, I'm calling it today, this is a no-go. Okay, that's my trade plan. If it breaks below, I will stop searching for any long opportunity on this pair. If in the other hand we break above the retracement channel top, and then we see a retracement and a final pull up, final push up beyond or above the breakout tip before the retracement, meaning this level, okay, and also above 165 round number, again psychological level of support and resistance, like any other round number in my opinion. So if we get a breakout above, then a pullback and a final pushback up above 165 round number and above the making new highs after the breakout, this level will trigger my long entry. Okay, that's my plan, guys. Breakout below, no go. Break up above with a pullback and a finally making new highs. This is a green light, too long above 165 round number. Stop loss as usual will be below the retracement bottom, okay, below 165, probably 164.90. That will be my stop loss. First target is going to be this double top formation right up there. This level has worked twice as resistance, so my target is going to be, my first target is going to be a few pips above, below that, probably at 165.30. And my final target is going to be the projection, the full projection of this bullish flag from here to here, add it to the lowest point of the retracement right there. So it's going to be probably about 165.75. Okay, once again you add the ball of the flag to the lowest point of the retracement of the flag in itself, and let me actually measure that move for you. There it is. Yeah, 165.87. Okay, 165.87 is the full projection. So let's be conservative, a few pips below, let's say 165.80, 165.75, around here. That's going to be my final target for this setup. Okay guys, I will stop the video now. We'll keep on updating it as soon as either I have an entry, or I call it, or we get a break below this level, and then it's a no-go. Alright, bye-bye. Hi guys, just a quick update on the setup that I was looking into for the EURCHF in the 4 hours chart. In the previous half of the video, I commented that I wanted to base a long opportunity on the breakout to the upside of this retracement channel upon bouncing of this area of support. It was basically before an area of resistance. Also, there was the 61% Fibonacci around there, and the uptrend as well. But this area hasn't held, and we've broken below. So since my trade plan was to go long on this scenario, but instead we've had a breakout to the downside, well, I'm afraid I'll have to pass on this trade. Alright, bye bye.